Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, October 23rd, 2006. And I've got the S&P 500 on the screen right now. The market did pull back a little bit today, but not very convincingly. The spiders on the screen right now were down 3 cents today. So a very, very small pullback. The market continues to be extended, but I think there's a lot of people that are looking to sell the stock short, and they all appear to be early so far because the market is really holding up very well here. Looking at a shorter term time frame, let's look at a 10-minute time frame. Yesterday I said I was a little bit concerned because we've seen this pattern of lower highs and lower lows, and that still isn't interrupted. Now we've got that 5-day moving average that it had been trending nicely higher is now kind of setting a sideways motion. So, and the market came up to that level right late in the day. Now it may be acting as resistance. So still too early to say whether this market's ready to turn or not, but it's definitely turned sideways at least. Can the sellers take control? We'll see. The market did get back below that 137.50 level, but didn't really stay there very long, and I think they probably got some new shorts involved down there and squeezed them this afternoon. So as far as the S&P 500 goes, there's really not much. You can't really make a convincing argument either way here. Although, just looking strictly at this time frame, it is starting to look like it's making a little bit of a top maybe in here, but this is the short-term trend, so we can't put too much weight into it when we've got a runaway bull market on the daily time frame like this. Last night when I was looking at the stocks, I mentioned that it was hard to find any good low risk, what looked to be good low risk setups on the long or short side. And that's the way it kind of seemed like it traded for me today too. Maybe it was a self-fulfilling prophecy, but I wasn't finding good opportunities last night in scanning for stocks. And today I really, it was slightly positive today, but really would have been better off just not even showing up today. Let's take a look at the semiconductors because they're obviously the area we've been talking about as a reason for concern. We do have a declining 200-day moving average. We've got a 10-day below a 20-day. That means distribution. And we've got a 50-day moving average that's just starting to flatten out in here. Now, if we take a look and see what's the value of the 50-day moving average, $33.99. So you could say we closed above it today by a penny. Now, I don't know if that's that really doesn't mean much of anything. But more importantly, we are starting to see that 50-day moving average turn sideways. It is still advancing. You can see here the value on Friday was $33.94. Then it was $33.96. Now $33.99. So it is still advancing. So we're still going to give the benefit of the doubt to the buyers. But it's not very convincing in here. So it doesn't mean we want to buy it by any measure. Looking at the 10-minute time frame, yesterday I'd suggested that the best support was at about 33.65. We didn't touch that level today. We got down to 33.71, and I thought breaking below 33.65 would then probably lead us to a test of these lows near 33.25. Then we could look even lower. But the market does continue to hold up. Let's continue to keep focused a little bit on that 33.65 level for the intermediate term. But if it breaks past in a convincing way this 34.05 tomorrow, then I think we could squeeze some shorts in here and maybe get this thing back up to 34.5 and delay an inevitable decline. Or will the buyers show up and take back control? We've got a lot of reasons to be I'm confused about the semiconductors. This failed breakout does a lot of psychological damage to the market. Now it just seems as though it's going sideways. Maybe we're just going to trade sideways for the next month, 2 months. Who knows? But breaking below these lows, below 33, below 32.75, I think you could see the semis back down near this 31 level. But there's no evidence of that so far. It's just a possible scenario. The Nasdaq 100 finished with a gain today. The Qs were up 10 cents, and continue to act very strong. Got a great looking bullish uptrend in here. And let's look at the weekly time frame. Again, we're getting, into these areas where we've seen sellers before. They may or may not be there again. Maybe this market's going to march right through this 43 level. We'll see. There's no signs that the sellers are taking any control in here now. It's looking like a higher low after today's pullback. And, we've got more mixed picture here on the 10-minute time frame. I think that the trend line that you can draw off the last 10 days or so is going to be important. But so maybe first of all, breaking, I'd say below 42.30 would lead to some probably a test near the 42.10 level. And if we get down through 42.10, I think that 41.60 is the next area. But back above 42.80, maybe we're going to squeeze the shorts in here because there's a lot of people looking for a top, and when everyone's looking for it, it usually doesn't show up. The mid caps came down and tested that 20-day moving average, touched on it almost perfectly, right at that level where, right close to that level where we thought there'd be support, which was 143. It broke down through that 43 level, but then found support, found some buyers quickly. So we've made these lower highs and lower lows. I think we've got a 5-day moving average flattening out at 144. All in all, this market's telling me don't be aggressive long or short. It's just a mixed picture in here. It's a stock picker's environment, continues to be. So let's go ahead and take a look at the stocks because that's where you're going to be able to make the money, hopefully. ARRS, we got involved in this one yesterday. Got involved at 13.55 right here. And I had suggested placing your stop today at 13.34. And today's low was $13.35. So this position is still alive officially. 13.34 is where our stop is. No reason to change it at this point. So let's see if the buyers come back in tomorrow or if we're going to get stopped out of this thing with a small loss. CRDN was the only other stock that's kind of open. I said I wasn't going to tell you any specific stop levels. I would say that at this point, I would use yesterday's stop near 40, or yesterday's high rather. Near about 41.80, just above 41.80. If it got above 41.80, I would say you probably don't want to continue to hold this CRDN any longer. And again, I don't know when earnings are due. Maybe they're due out tonight. I don't know. Ballard Power, it suggested buying this stock above $7 a share today. Had a nice little rally up to about 732. And then it came back down, but it still looks good. So we'll keep. We had our stop at 685, in at 7. Let's say the stop right now goes at about 695. That is reducing our risk now to only about a nickel versus the 15-cent stop that we had in there earlier. Palm, I was emailing someone today saying, I'm not really sure why I mentioned Palm. I think it's because I get so many emails about it, but I wasn't thrilled about the way this looked because the way it broke down and came back into the range. When they break out, when it broke out, then it pulled back into the range that it broke out of, and that's not supposed to happen. It's to me it's kind of like the semiconductors, where I'm saying from failed moves come fast moves, and you could have a pretty good failure here in Palm. But I did suggest buying the stock above 13.65. Today's highs were, what was today's high? Today's high was 15.66. So officially we got into it. I also suggested a stop at 15.43. So if you did get involved, it should have been stopped out with a small loss, 22 cents. And no reason to continue to look at this thing. The stock continues to show us why the symbol is not RIMM, because RIMM isn't a great uptrend, but Palm is the follower. This is the AMD versus Intel is just not a good stock to own. CCJ, Cameco, this stock we were looking to sell short. The way I wanted to see it pan out was first for a rally up to $35 a share. It rallied to $35 a share late in the day, so that would have triggered us to start to look for an entry. The entry, though, was going to come as it broke back down through 32.80. That entry never came, so there should have been no reason to take any position at all in CCJ. Finally, SIGA, SIGA Corp. Like I said yesterday, worst case stop 342. I'm not going to give any specific recommendations because I'm still in some of this stock, and I'm looking to add to it as well. I haven't added to my position yet, but I'm still thinking that this one could continue to move higher.